This is the ultimate top signals guide on exactly when you should sell your crypto. I've spent hundreds of hours analyzing past crypto bull runs to try to compile a list of the most accurate top signals, the things that happen every single time right when the market reaches its peak and right before the entire crypto market collapses. Surprisingly, there are quite a few really strong and consistent patterns that happen every single cycle that give you an idea of when the market has reached its peak. Now, I personally don't think the vast majority of these indicators are worth looking at alone. For me, I'll be looking at the indicators as a whole. And when the majority of these indicators are all happening at the same time, that will be my top signal. That will be the time where I say, hey, maybe it's time to consider selling everything. And I have a similar list of bottom signals that I watched throughout the bear market that allowed me to buy into the market with literally my entire net worth. I threw every dime that I had into crypto about a week from the exact bottom of the market. So I was able to use a similar list of indicators to time the bottom of the market, and I'm hoping to use a similar list of indicators to time the exact top of the market, or at least kind of close. First up, we have the most basic indicator, but probably the most comprehensive and accurate, and that's the typical 4-year cycle. Every crypto cycle, 100% of all crypto cycles have played out on the exact same 4-year time frame. The first cycle, Bitcoin went from $0 in 2009 to around $1,200 in 2013. The second cycle, Bitcoin went from around $1,200 in 2013 to around $19,000 in 2017. The third cycle, Bitcoin went from $19,000 in 2017 to around $69,000 in 2021. Each cycle top was roughly 4 years from the previous cycle top. That means if we follow the same pattern that we have so far, this cycle should hit its peak at some point in 2025. And to be more specific, if it plays out really similarly to the previous cycles, then this cycle should peak towards the later half of 2025. Now, I've tried to figure out why these markets are so eerily similar. Like, why every 4 years does Bitcoin hit this new all-time high and we have this crazy crypto bull run? And my best guess is it has something to do with normal market psychology and the broader macro cycles. Things like interest rate cycles, the M1, M2 money supply, US elections, and things in that realm. Plus, each cycle, we seem to have some sort of innovation or adoption catalyst that allows the market to kind of spark into that bull run. During the 2013 cycle, Coinbase launched, making it way easier to buy crypto. During the 2017 cycle, we had the invention of smart contracts and ICOs. During the 2021 cycle, we had the invention of DeFi, the popularization of NFTs, on-chain lending, and a ton more. In this cycle, 2025, we have TradFi adopting crypto via ETFs. We have better wallets and UX. We have protocols generating real revenue, some like Ethereum in the billions of dollars. We have super cheap transactions via Ethereum L2s like Optimism, Arbitrum, Base, as well as things like Solana and Polygon. Plus, we have a ton more catalysts coming like crypto gaming, which in my opinion will onboard a ton of users into the crypto space over at some point in 2024, 2025. Okay, so the first indicator is the traditional 4-year cycle. And so far it's been 100% accurate. And that tells us that we should probably sell, or that we should experience a top at some point in 2025, more specifically late 2025. The second top signal is when people are maxing out their credit cards, when they're selling their houses to buy crypto, when they're taking out loans to buy crypto, and in general, when leverage starts to enter the market in these various ways. Human psychology has been the same for thousands of years, and you can expect it to continue to be the same for thousands of years. Cycles have this crazy parabolic run up and this massive collapse after, because people can be expected to behave the same ways in most situations. Typically, it plays out like this. Initially, after crypto prices collapse and we go into a bear market, people are obviously really skeptical of buying any sort of crypto assets. However, as time goes on and we have this long period of crypto kind of creeping up and going up in price, people start to trust that trend a little bit more. And this is sort of like a trickle at first. Slowly, more and more people believe in the trend. They start allocating a little bit into crypto. That obviously fuels the trend, pushing things higher. And over time, more and more people enter the crypto markets. Eventually, everyone starts to believe in this trend, and they believe that crypto prices are going to continue to go up. And when you have a multi-year trend showing you that crypto prices continually go up, and you're expecting them to keep going up, it starts to seem more reasonable to people to take more and more money out of their account and invest reinvest it into crypto. And in some cases, maybe max out their credit card a little bit and put it into crypto, or maybe sell their house and put it into crypto. And so that's why we start seeing all this leverage enter the market. And obviously, when this kind of stuff happens, the market just skyrockets. It goes parabolic. Prices are going through the roof. Everyone feels like they're getting rich. And all this kind of feeds off itself and just really makes the market go crazy. But at the same time, it makes the market really unhealthy and really unstable. Too much leverage and too many people putting too much money into the market where it's not like a healthy amount of, investment capital makes the market really unstable. So when people are maxing out their credit cards, they're selling their houses, when you're seeing this kind of stuff on TikTok, people are taking out a ton of leverage and they're excited about it and bragging about it because they're making so much money. You could probably guess we're later stage in the market cycle and we're probably pretty close to the top, if not at the top already. And this one really goes in line and is similar with a few other indicators that I've compiled. And that would be when everyone believes that the market can only continue to go up and when all the experts are talking about some form of the super cycle. For reference, every single market cycle, somebody comes up with some sort of like really intelligent sounding reason as to why the market won't experience a bear market this time and will only continue to go up from here. Last cycle, they called it the super cycle. This cycle, they're going to call it something else, and they're going to have different reasons that sound really compelling as to why the market won't collapse this time. My personal belief is the most obvious excuse that people are going to come up with is that because TradFi's here, because we have these Bitcoin ETFs and soon, Ethereum ETFs, that this time it's different. TradFi money, they're not just going to sell for any reason. They're long-term holders. And so because of that, we're going to be more similar to the stock market. This is what people are going to say. We're going to be more similar to the stock market. We're not going to have these crazy bear markets. Volatility is going to be a lot more muted because crypto is so big now. And because of all that, this time we're not going to have this massive collapse like we normally do. However, as I just outlined, people typically behave the same way. When they think it's going to go up only, they're going to take out leverage. The market's going to get unhealthy, unstable, and it's going to collapse. There's no way around this period unless you just consistently climb what is called climbing up a wall for you. Unless you consistently, people are bearish, they're scared, and it's just slowly climbing as people are bearish and scared. That is the only way you can continue to go up only. But eventually, people stop getting bearish and scared when a market goes up only. They start getting confident, they do stupid stuff, and the market collapses. This is a normal cycle of how people behave and things turn out. So remember that. Okay, the next indicator is the Coinbase App Store ranking. This one is super simple. When Coinbase is ranked number 1 in the App Store, that is typically a top signal that means it's about close to the top and about time to sell. For example, in December 2018, Coinbase hit number 1 in the App Store, and about a week later was the exact top of that cycle. In late October 2021, Coinbase once again hit number 1 on the App Store, and once again, a few weeks later, we hit the exact top of the market, and the entire thing collapsed. This goes in line with a famous Warren Buffett quote, which is be fearful when others are greedy and be greedy when others are fearful. So when Coinbase hits number 1, you got max greed in the market. That's the point that you should be the most fearful that things are going to collapse, because typically that's what happens next. After that, the next indicator is the Ponzi's going crazy. I break each cycle into 4 different seasons. The first season is crypto winter, and that's obviously the bear market. Then there's crypto spring, where prices are going up, the market's sort of thawing out. Most of retail and most people still aren't paying attention to crypto. Most people are still pretty bearish, but in general, the market just kind of slowly is creeping up. After that's crypto summer. That's when the mainstream starts finally getting into crypto. Prices start skyrocketing. Everyone's making money, and it's just, an amazing, awesome season. And the final season is crypto fall, and that's when everyone starts leveraging up. They start maxing out their credit cards. The Ponzi start going crazy. Nothing makes sense anymore. Everyone's quitting their jobs and going full-time crypto investing, and it is just a crazy circus mania. And crypto fall is typically when we see a ton of the Ponzi projects skyrocketing, and just that's what everyone's wanting to invest into. And these are basically projects that seemingly print money on demand, and they're making everyone and their mom rich. It's like weird passive income, weird sort of things where it's just you put some money in and it's just printing money out, and you're like, how is this working? This is like magic. Why did I even have a job when I could have just stuck $1,000 into this thing and made a full-time salary? Last cycle, it was projects with like insanely high APYs. There was a lot of node projects. There was a lot of ohm forks. And it's worth noting how the market gets here. Like, how does the market get to a stage where they're throwing like their life savings into 1 billion% APY projects? And it really comes down to, once again, market psychology. Early in the cycle, people are feeling really conservative. They just got burned by the bear market, so they're investing in things like Bitcoin, ETH, and a lot of the blue chips. Later, as people feel like they missed out on investing in Bitcoin, Ethereum, and all those things because they've already gone up so much, they start looking for opportunities elsewhere. And typically, they look at all the alts and they say, hey, well, these haven't gone up quite as much as Bitcoin and all these other things. Maybe there's still an opportunity here. And that pushes the prices of those things, the alts, up a lot. And when all those opportunities feel like they're exhausted, so everyone's already invested in Bitcoin, those have gone up. Everyone has invested in the blue chips, those have gone up. Everyone has invested in like the high quality alts, and those have gone up. People start going further and further out in the risk curve, looking for things that haven't gone up, looking for places where there might still be opportunity. And that leads them to a lot of low quality projects and a lot of Ponzi get rich quick schemes. So we're getting really close to the end and really close to the top when it's Ponzi season. And I have a ton more top indicators, including one that's been right 100% of the time, but really quick. The Obsidian Council is my private research community where I share monthly research, my entire portfolio updated monthly, buy and sell alerts when I jump into projects, and a ton more. We've had projects like Akash, which is up over 1,500% since sharing it. We've had projects like Pindle, which is up over 1,300% since sharing it. Solana, which is up over 630%. Cow, which is up over 180%, Index, which is up over 200%, and a ton more. We also have the airdrop guide, which some members made over $26,000 last year alone from airdrops, covering their membership for literally decades. I personally made well over 100K from airdrops between this year and last year, and I share everything I'm personally doing with airdrops with the community via the monthly airdrop guide. The OC is currently closed to new members. However, if you missed out and want to be able to jump in next time I open back up, there's a waitlist in the description of this video. Make sure to sign up. The next top indicator is when the villains are taking center stage. Typically during a bear market or like a healthy market environment, a lot of the biggest voices, a lot of the most popular characters within the crypto space are these really humble guys. They're typically developers. They're really nerdy. They're talking about nerdy development stuff. And that's like what makes up most of the discourse within the bear market. But during a bull market, the most popular and loudest voices typically are like these really shady characters. Most of them are really big jerks. They're constantly flaunting their wealth. They're flaunting the fact they bought this really expensive luxury car, their crazy luxury vacation, and all this wild stuff that they're doing with their money. And these people are almost universally loved and in some ways kind of weirdly worshipped by their followers. When this happens, we're getting into an unhealthy market and we're getting close to the top. All right, the next top signal is a classic one and like a textbook definition of when you're in some sort of bubble or when you're kind of getting close to the top because the market's getting really frothy. And that's when your friends, your family members, your Uber driver, your barber, they're all telling you what cryptos to buy. When people who don't traditionally invest and they're not traditionally involved in the crypto markets suddenly become experts and they're giving you advice on what to buy and what to invest in, that typically means that we're close to the end. After that, kind of a similar one is like when your neighbor or your friend who knows nothing about crypto is investing into tons of Ponzi's and they're making more money than you and it's starting to make you feel a little bit jealous and like maybe you're doing something wrong. This happens every cycle. It's probably going to happen this cycle. When that happens, you're typically close to the end. After that is when crypto goes mainstream. When your favorite non-crypto influencer, athlete, movie star, etc. is talking about crypto or is talking about one sector of the crypto space and how it's the future or how they invested into this or how they're launching a meme coin or an NFT collection. That should be a huge red flag indicating to you that you're probably getting close to the top. Next up is VC raises getting out of control. Around peak mania, we see some insane VC raises, either like crypto VC funds getting raised that are just like absurd and wildly too high, or like VCs allocating into newer projects with absurd amounts of money that don't make any sense. Another classic one after that is tattoos. When you see people on Twitter, Instagram, getting a tattoo of their favorite project or their favorite meme coin or whatever, that is typically a really hardcore top signal. Like when people start getting tattoos of their favorite crypto projects, NFTs, meme coins, whatever it is, that should be a red flag to you like, hey, maybe it's time to sell. After that is when you find yourself checking your portfolio 20 to 50 to 100 times a day. That typically means you're experiencing some serious greed when it comes to the crypto market, and you're likely not the only one experiencing that greed. And if you're experiencing that greed, then maybe some other people are taking out some leverage. They're maxing out their credit cards, doing risky behavior like that. And so typically that is a sign that you might be close to the top. It's not always a sign of that because, maybe you just had one crypto project that is doing really well and it's kind of an outlier project where maybe the broader market isn't doing as well. So again, don't take that one as like a always, sell when you're checking your portfolio a ton. Some people might just be addicted to checking their portfolio as well. But use this indicator in line with other indicators. Like if you're checking your portfolio 50 times a day and all this other stuff's happening, might be a good time or a good indicator that you're close to the top of the market. A big late stage indicator is like crazy flashy crypto marketing things. So think Super Bowl ads, think of like a stadium getting named after a crypto project. Think of crypto projects putting ads in places that just seem crazy and over the top, like they have too much money to spend and they're just blowing money on some crazy thing just to get the prestige of it. This is usually a sign that crypto projects have forgotten to be paranoid. They've forgotten to be frugal and conservative, and they're just blowing money to try to capture as much attention as possible because the market's hit max greed, and that actually pays to capture a ton of attention. Projects like, hey, we're gonna rename whatever stadium after us. Typically the price pumps because people are like, oh, that's a bullish thing, and it tends to benefit that project. And that's kind of late market behavior. That's things we see in the late stage of the market, and it's typically a sign that we're close to the end. Another one to keep an eye on is when people are searching for like the cheapest coins. This is again really similar to Ponzi season, crypto fall. So when like on Google search or on YouTube search, there's a lot of search trends for people searching for like the cheapest crypto coins or the smallest crypto coins. This is because traditionally they feel like they've missed out on all those opportunities. They're now looking for the late stage opportunities, and it means we've entered the end game of the crypto cycle. After that, we have an indicator that's actually pretty amazing and has been historically right 100% of the time. And that's the Pi cycle top indicator. Every time the 111-day moving average crosses over the 350-day moving average, it's a top and it's time to sell. Or if that's a little bit confusing, every time the orange line crosses over or touches the green line, that typically, historically, has meant it is a good time to sell because we have reached a top. Finally, the last indicator is when you feel like it is the stupidest possible time to sell. When you feel like it makes zero sense to sell, everything in your bones is telling you to take out a little bit of leverage. Everything's telling you to go sell your car, sell your house, whatever, invest into the crypto markets, and you feel like there's no way that you should be selling right now. That might be a sign that it's actually the best time to sell. The average person is not going to sell at the top. The average person is going to invest in the crypto markets. They're going to lose money. That's because the average investor doesn't become a multi-millionaire investing into crypto or anything else. Only the outliers do. Only the people that think counterintuitively or a little bit different than what the average person thinks. It's just like the bottom of the market. At the bottom of the market, it's peak fear. Nobody wants to invest. And people think you're like literally crazy stupid if you invest at the bottom of the market because they know crypto is going to go way lower. It's about to collapse. It's about to experience a crisis in their minds. And they think, what was wrong with you? Why would you invest after FTX collapsed? That's when you would have had to invest last cycle, was after FTX collapsed, after everyone's saying, Bitcoin's going sub 10K. That's when was the optimal time to invest, when everyone was at peak fear. And the same thing goes and is true with the top, when everyone's at peak greed, when it feels crazy to sell. That's typically the time that it's the best to sell. As always, none of this was investment advice. None of this was me telling you when to sell or when not to sell. These are just top indicators. These are like tools for you to put in your little tool belt and use them however you choose and see fit. If this video is helpful, make sure to hit that like button. If you have anything to add or any other indicators that I should have on this list, let me know in the comments below. And if you want to see more videos like this, make sure to hit that subscribe button, but you got to also hit the little bell next to it to be notified each time I release a new video. Thanks for watching, and I'll see you next week.